Welcome to the Extraordinary Executives Podcast, where business owners like you share their experiences, insight, and lessons learned. So grab your cup of coffee or tea and get ready for an engaging conversation. Here's your host, Randy Jones.
Hey, everybody. Thanks again for joining us today on the Extraordinary Executives Podcast. I'm your host, Randy Jones, and we have a phenomenal guest today, Mr. Brian Castel of Restoration Capital. Welcome, Brian, to the show.
Hey, Randy. Thanks, man. How are you?
Man, I'm great. Hey, I want to get started in here. You got an exciting story to tell and share with everybody who's listening. So tell me about Restoration Capital. I mean, I know you got a bunch of other companies as well, or better yet, why did you start the company?
Well, I guess I started the company because I've always been passionate about people and cash flow, two completely different things. But in my former life, I was in sports medicine and in EMS, both of which those roles, I guess, you have to be passionate about people, especially in EMS. But I realized there wasn't a whole lot of money in those fields. And I didn't think I could ever achieve, I guess, the level of financial freedom that I was looking to achieve. So I latched on to another business owner, actually, who ended up becoming a mentor of mine, or really my only main mentor, if you will, in this industry. And we started a company together back in 2005, 2006. And then about 4 or 5 years later, I was kind of given the green light to go out on my own, if you will. So that's how it all took place.
So Restoration Capital, I mean, what are you guys specifically doing? And I guess what's like your day-to-day role? And are you like running it, or are you out there finding new opportunities? What do you guys do?
I mean, my title would be managing member and founder. Managing member is just, the title of anyone who owns an LLC. And, if it's a sole member LLC, they effectively are the managing member. But, I guess for all intents and purposes, one would say CEO, though it's not commonly used in the LLC world. The company itself is a private equity firm. In the industry that I'm in, we would be called what the term would be a hard money lender. So we're lending against hard assets and primarily real estate. Really only real estate. So the loans are equity based. We don't really look at the income of the borrower or the assets of the borrower. We care about the borrower's experience and the equity in the deal, essentially. So a lot of folks see people, fixing and flipping properties on TV. We're the guys that lend money to those people so they can do what they do.
Mm-hmm. So what do you think? I mean, describe, I guess you have another business, why did you get bored with this business and decide to branch out, or it was a natural fit for you to grow in additional verticals?
Yeah, it was a natural extension. So, I mean, the other larger business is called RC Income Fund. We kind of took the network that we had built with Restoration Capital and capitalized on that to go out and acquire a lot of real estate, basically, and go in, renovate said real estate, and then, rent it out for additional cash flow. So that business runs in the background. Between, those companies, we have, profit sharing plans, if you will, and those, individual plans themselves invest in other companies and other startups. So it's kind of more of an entrepreneurial, I guess, mindset, if you will. But I just started another company, literally, back in February, called B. Michael's Luxury Escapes. So the whole idea of that is, go out and buy luxurious properties and rent them out, either through an Airbnb type platform or another company called Inspirato.
Mm. So, I mean, running multiple companies, you said you had, your primary mentor. I mean, did he teach you how to do this? Or better yet, what would you consider, or what contributed to your success in being able to scale into different companies and different platforms?
I say this as a veteran, I guess, in the industry of private equity or hard money lending, because I've been in it for more than 10 years. And most of the players have really been in it for, I'd say, less than 5. Honesty and transparency. From our initial contact with a client through loan origination and servicing, I don't think there's anything that's been more instrumental in our success than just being honest. It sounds like such a simple thing, but it's really not in our industry because there's so many, I don't know, bait and switch tactics, if you will, and marketing materials that are out there to get people to make the initial phone call that they make to your company. And then when it gets down to it and it's time to settle, something's not right. Something's changed. And our entire business, I say this almost, it's not necessarily a positive thing because we have not spent really any money on marketing over the last 15 years. It's all been word of mouth. So we've got clients who are telling other, potential clients or leads or family and friends about what we do and how we treated them. And that's led to our success completely. So, an example I can give you, it just literally happened a week ago. We had a client, she wasn't even a client, actually. She had approached us maybe 2 years ago to do a loan, never worked out for whatever reason. I don't remember what the reason was, but came back to us a week ago to do a loan and take out another lender, a competitor of ours, essentially, to give her more money to basically finish renovating the property she was working on because she had run out of money. And of course, as we all know, in the past year, there's been tremendous appreciation. So the loan to value ratio of the loan, had come way down. I could have easily done the loan and honestly probably would have made, I don't know, somewhere between $8,000 and $10,000 if I had done it. But I asked her as we dug into it, have you reached out to your current lender just to see if they're willing to do a loan modification? Because it won't cost you much, if anything, to do that. And she's like, wow, I never thought of that. So I could have easily done the loan, easily profited from it. And probably actually she would have been quite happy because we would have closed it quickly for her and gotten her the capital she needed. But in turn, I probably saved her, let's call it $6,000. And, she'll hopefully be able to do what she needs to do with the current lender. And she'll remember that and tell either her friends about it or come back to us, next time she needs a loan first.
Wow. They say, honesty is probably one of the best marketing tools. With what you do, like you said, you're the managing member, but you can't be doing it all by yourself. The team, they say, together each achieves more. The people who are listening here, because I'm sure there are business owners who are thinking about, hey, I'd like to get into that business. I've seen it on TV. I want to know the reality of it. What do you think has been essential when it comes to the team that you work with and putting that together just to manage all the different things you're doing?
I think it's of paramount importance to realize early on in any business venture what you as the business owner excel at and where your skills lack. I think once you've determined what your weaknesses are, you need to fill the gap, so to speak. So, we did that pretty early on. Myself in particular, I can't stand managing books. I can't stand accounting. I really don't understand tax code.
Wait a minute. When you work with money, I guess lending money.
So, it doesn't necessarily mean that you've got to hire people to fill those gaps and those roles, but, it does mean that you can't be afraid to spend money on that third-party advice, counseling or any other arrangements. But once you find the people that are, instrumental and successful in what they do, that's when I hired them and I brought them onto the team and, I never let go of them. So, they may have started out as third-party contractors or whatever you want to call them, but then you bring them onto the team, treat them well. And in turn, the sky is really the limit, right?
Right. Now, private equity lending in the real estate realm, some people call it, private money, hard money, the market changes. And I think right now we're going through a change. Interest rates are starting to come back to where they should be. I guess some people would say they're normalizing, and opportunities with the appreciation in homes and just the market itself. How have you guys, because you said 2005, so you went through the 2008, the 9, the drop, now it's starting to come back and people are sort of repeating a lot of I would say the same mistakes potentially, how have you guys been able to just sort of weather the storm when a lot of people, like you said, have not been in the business for a long time? Outside of just being honest with people, what type of strategic or business strategies, have you guys implemented?
So both the recession and actually the pandemic were significant unknowns for us, right? My mentor was still alive during the recession. And the one value I'd say he instilled in me at that time was patience. He firmly believed that patience would lead to perseverance. And it was not a good time at all. So our business includes two types of customers, if you will. We've got, a significant group of investors who place capital with us, and they're expecting a return on said capital. And then we've got customers who borrow that capital. Those are, the real estate investors. So I recall him stating, over and over again that without the capital from our investors, there is no business. And that cliche of, the customer is always right is what was drilled into my head. So we took it on the chin during 2008 and 2009. And what I mean by that is, and as a young business owner at that point in time, I was writing checks back to the company. And that was scary, right? It was not pleasurable by any stretch of the imagination. But in turn, he believed, and I believe that, once things turned around, that those investors would remember that they received every dime they were supposed to receive during the worst economic meltdown in recent history. And it wasn't fun.
Right.
But in turn, what happened is, as soon as we came out of that, recession, we had investors basically piled up to give us more and more money, because they said, how in the heck did these guys make it through? When literally, without a doubt, 50+% of our competitors went under, right? There was a 35-40% real estate market correction that took place in the span of about a year and a half. Right. And when you're making loans that are roughly, 70% loan to value ratios, that means, you could be going under water on, some of your loans. And we did. But that was probably the biggest lesson, was just patience and letting things ride out a little bit and, see where they would go, and then being ready to pounce once things kind of turned around.
I guess it paid dividends just to keep your word. I mean, what I'm seeing is a mantra: honesty, patience, keeping your word. I mean, that's really contributing to all of what you're able to do.
That's it. It's it in a nutshell. And honestly, the pandemic itself, I remember the date that things kind of changed back in 2020, and it literally happened overnight. And, without getting into too much of the specifics, our industry has changed a lot in the last 5 years. Like it used to be, when I started, it was all mom and pop operators, if you will. I call myself a mom and pop operator, I guess. But folks who were getting money from a group of investors and then basically turning around and lending it out at a higher rate. That was it in a nutshell. And, some people operated very successfully and, tight organizations, and some people complete opposite, right? They could, be loosey-goosey and lending high LTVs and doing risky loans and whatever. 6 years ago, Wall Street became very, very interested in what we do. And when I say, Wall Street, I'm talking private equity funds that were multi-billion-dollar funds kind of came into the table. They've leveled the playing field to some degree and thinned out margins for the mom and pop operators. And a lot of those mom and pop operators have gone under. But the nut, in and of itself, what has changed from what initially started with the pandemic was, we didn't know what was going to happen, right? And March of 2020, a lot of the folks that were getting money from these big private equity funds, those funds dried up literally within 24 hours, 48 hours, and underwriting guidelines and everything was changing. So nobody knew what was going to happen, if the market was going to, plummet. And in turn, it actually ended up skyrocketing. But the takeaway from that was the entire process, it was maybe like a 2-week point in time where there was just tremendous amounts of unknowns. we were communicating regularly with both our, investors that we get money from, as well as borrowers who borrow from us, and just asking everyone just to be, again, as transparent as possible. Here's what we're, going through. We're not sure how it's going to react. I remember talking to borrowers at the time saying, I don't know if I would do the deal right now. You might want to try to get out of the contract, because we didn't know what was going to happen. And it was just, it was almost a little scarier than the recession.
Right. So I think things have changed. You guys turned the corner and like you said, you just started another business. Based on your success, what do you think is probably the biggest challenge that you're running into right now?
Well, the private equity funds that I was talking about kind of coming to the table have definitely compressed margins, and they have changed the face of how we lend. We still really are lending our own capital, which we're one of the few outfits, especially in our region, that are still doing that. It's afforded us, the opportunity to still move quickly and efficiently and service our clients. So that's one of the biggest challenges. I'm young enough that I don't have experience with inflation. And I'm a little nervous as to how the market's going to react to that. So I'd say that's probably one of the other large challenges. The third one's just one that we've been dealing with really since the pandemic started, which is just a lack of inventory in the industry. There's just not a lot of properties for people to flip right now, to renovate and resell for a profit. So that probably remains, I'd say, one of the largest challenges as well.
So now you said you're young in the business. Well, I wouldn't say young in the business, but still young enough having to not experience inflation. If you were to have a conversation with yourself 10 years ago and you were now your mentor, saying the fact that you've experienced multiple markets, and I'm sure you've experienced the challenges of just business itself, growing and contracting, what advice would you give to yourself 10 years ago based on what you know today?
The first one is to choose your business partners very carefully. I have had quite a few over the years in the different businesses that I've owned, and you can't do a good deal with a bad partner. So I'd rather do an average deal with a great partner, because if you work well together, you can make it successful one way or another. So partners of paramount importance if you even need a partner. In retrospect, I think I'm not going to say this business, but some of the other businesses I've had, I don't even think I actually needed the partner that I brought in. So the partner has to contribute something to the partnership that you wouldn't otherwise have. Otherwise, stay humble, stay open-minded. You can learn something from absolutely anyone. And I continue to learn on a daily basis, just with people I'm talking to on the phone, meeting out at, the occasional networking event that I go to, which unfortunately are few and far between these days.
Right.
But humble, open-minded, generous, that's probably what I would say, 10 years ago.
So you cast a wide net with all the things that you're doing. So, in your business now, which is growing, I guess to shield yourself from things that change in the economy and stuff, who's your ideal client, or what's your sweet spot now? But what do you look for?
So Restoration Capital primarily works with, we work the full gamut, if you will, of borrowers. When I say that, there's a term in our industry for folks who are just getting started. They call them newbies or weekend warriors. Folks who go out and maybe they'll flip, one, maybe two homes a year.
Right.
Or they have a day job and, they're just going out on the weekends and, swinging a hammer. And we work with folks who flip, 5+ multi-million-dollar properties at a time, and everything in between. The sweet spot, and it kind of goes back to what I was talking about earlier. I want to work with folks who are honest and transparent. I don't like surprises. I want the deal to succeed from start to finish. I never want a deal to go bad, and I'm not in the foreclosure business. I don't want to ever have to take somebody's property back. And these are investment properties. They're not homes people are living in. So it's a little bit different than what somebody might see on the news. But To me, I don't like games. I like people who are just honest, transparent. This is the deal. This is the plan. This is what we're going to do. And this is how we're going to make money. And I want to put money behind them and see them succeed. So if that answers the question, that's the answer.
Yeah, yeah. So I guess what's next for you? I mean, I know it looks like you got a little tan there, so I'm sure you travel and everything. Do you feel like, you'll just run the business forever, or is there some type of exit strategy, or I don't know, will you just go into doing seminars and speeches on how to do what you do? What's next for you down the line?
Yeah, I mean, I haven't gotten to the point where I'm thinking about an exit yet. And there's several reasons for that. Number one, the business at this point is pretty much running on autopilot. It's not, I mean, I'm definitely involved daily and, hours a day. It's not like I'm not working, but it's running very efficiently, very smoothly. And, the phone continues to ring with virtually no marketing. So it's hard to try to exit from something like that. And moreover, there's a lot of family and friends money that's involved, millions and millions of dollars that we manage. And I think some folks might have issue if I left, tried to sell the business. So, that makes sense. But we have a profit sharing plan that I use to invest in other, vehicles and startups that brings me actually a lot of joy, just watching other businesses, kind of take off from nothing into something. So, I think that continues. Other than that, I'm very happy with where things are right now. I don't necessarily, we went through a major change last year with a partner that was involved in the company, and things are running incredibly smoothly now. And I don't necessarily want that to change. I just want to keep on the path that we're on, and we grow a little bit, we grow, we don't. I don't necessarily need it to grow anymore at this point. I'm very comfortable. I get to travel a lot, get to spend a lot of time with my family, with my friends. So
outstanding.
Yeah.
That's the true legacy right there. So I guess outside of more clients or more opportunities, what do you feel would be the one thing that would move the needle in your business?
More time would probably help move the needle. I'd say the one mistake, if I'm making a mistake right now, is that I probably am doing a little bit too much. I've got too many, too many ventures going on maybe at the same time, and it's a little tough to manage all of them. So aside from duplicating myself, which is, not really easy to do, more time would definitely move the needle. But, that being said, I'm at a point in my life where I'm not sure I want or I need to move the needle. So, I'm not sure that answers the question, but
I mean, I think that's a good answer. I mean, it's hard a lot of people who are going to be listening to this, they really seek to be in that place of sort of, I would call it Zen, business is going well. And sometimes when people have business going well, they want to like change it or, mess it up or say, hey, we probably got to do something else, or we should be doing something else. And it's okay just to be in that space. I mean, the whole goal was not to be at work 24 hours. It was to be able to spend more family time and do things that make life worth living, so to speak. And so I guess, what would you like, you got a family. What would you like your legacy to be? Or what would you like people to say? I mean, your mentor had a huge impact on your ability to do what you're doing today. What would you like people to look back and say, hey, this is how I remember Brian?
Yeah, it's a good question. I guess as I've become more successful over the years, and I use that term loosely because, success is a conversation in and of itself. I've definitely found a desire to give back more, to help others in need more, some of the extra time that I have on those type of ventures. So I suppose I just want to be remembered as somebody who is honest and a giving entrepreneur, if you will.
Do you think you'd ever become somebody else's mentor?
Oh, 100%. I'm already in the process. Yeah, without a doubt. Yeah, without a doubt. And it's a lot of it's, time constraints, unfortunately. But I mean, I'm hoping one day to give the business to somebody who is essentially what happened to me, or at least give them the tools to go out and expand it. There are things that I don't do, I shouldn't say but we don't do or don't do well. We could be all over, Facebook ads and Google ads and, social media, and we're really not. which there just hasn't been a need to, but we could be.
Right.
And I could probably bring in my 14-year-old son to expand the business by 20% in a year. He could probably do it through social media, but I haven't had the need to do it. So, yeah.
So the business owners that are listening right now, what last piece of advice would you give to them? They're going to be people who are listening and have all types of businesses. But business in general has some fundamentals. What last piece of advice based on your experience would you give them?
So in my opinion, there's no better training than on the job itself, right? I hate the expression fake it till you make it, but there is something to be said about that. So to me, if you find a mentor that you connect with, latch on and don't let go. That's the first thing I think I would say. And, you can often structure that in a way where the mentorship is free of charge, right? And maybe you're putting in sweat equity like I did. The first business I was involved with, we built it to about 25 million, I'd say, within 3 years. And at first I was basically almost acting like as an assistant to the owner. And, very shortly I ended up with, I think, about 18% of the business.
Wow. Just
because of the sweat equity I put in. And he saw very quickly that, I was grasping, the business quickly. And, he didn't want to let me go. So I think latching on to a mentor is, maybe the first bit of advice. Attend events where you can be mentored by others, who are miles ahead of where you are and they're where you want to be.
Right.
Accomplished what you want to achieve already. So anytime you can find those events, go out to them, mingle, network as best you possibly can. Learn to sell in person, face to face. There's no better way to do it. I don't think I didn't realize at all because of the previous, industries that I was in, sports medicine and emergency medicine, how good I was at selling. And I actually picked, I think, a lot of that up from that mentor who's, no longer with us. But, if you're looking people in the eyes and you are speaking directly to them, and those type of things make a major difference. So, I tend to be too honest with people sometimes. I tell it how it is. Deal is presented to us, a loan application comes in and we're analyzing the deal and we don't like it. I'm telling the client why we don't like it. And I'm very direct and very honest. I don't mix words. And, I'd say 9 times out of 10 that the client ends up agreeing with us and backs out of the deal. And, maybe they lose their earnest money deposit, but it's better than losing tens of thousands of dollars on a bad transaction. And that, it goes back to what I said earlier. Those clients come back, even if they weren't a client or a customer at the time, they come back because they saw what we saved them from. And there's value in that. Maybe the last thing would be stop working for money and work for experience. The experience itself is hard to replicate. And if you're just in it for the money, it's probably, in my opinion, it's not going to succeed. So if you're working to serve others, to provide a service that is, again, honest and transparent, it's hard to beat that. And I'll tell you, the same year I figured that out, that I stopped working for money, I made more money than I ever made. And every year it's just gone up and up and up from there. So I used to count pennies. I'm not kidding, man. I'd log on to Microsoft Money every night and put in every little thing. And it was like, what's the point? What's the point? So.
Outstanding.
Yeah, that's it.
Hey, thanks so much. And once again, hey, we've been talking with Brian Castel of Restoration Capital and a bunch of other businesses as well. He definitely, as you can hear, puts his purpose before his profit, and is purposeful about people and protecting their needs, their goals, and making sure that everybody wins. I like the win-win attitude. I appreciate you spending the time. And I can tell you, based on our conversations in the past and definitely today, you definitely are an extraordinary executive. Thanks so much for spending time with us today.
This podcast is for informational purposes only. Guest speakers and their firms are not affiliated with or endorsed by PAS, Guardian, or Financial Growth Partners, and opinions stated are their own. Randy is a registered representative and financial advisor of Park Avenue Securities, LLC, PAS, OSJ 11350, McCormick Road, Suite 202, Hunt Valley, Maryland. 210314108285540. Securities, products, and advisory services offered through PAS member FINRA SIPC. Financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. Financial Growth Partners is the DBA name of IAPA LLC, a wholly owned subsidiary of Guardian. 2022 139007 624.